Well, guys, it looks like it's happening. The dollar may actually be reversing, and it's been in a downtrend pretty much all of 2025, but we are seeing some price action signals as well as some fundamental catalysts that I'm going to go over today that suggest we may still see some more upside in the US dollar. Now, a little bit of context, I'm filming this pre-FOMC, and if anything crazy happens, I'll make sure to insert that into the video here after the press conference. But I'm going off of the fundamental data here first because I want to talk about this dollar reversal that I think is taking place right now. Price action wise, we're looking, at least at the time of recording this, again, pre-FOMC, at a possible closure above. And I'm okay to film this now because if we get a candle that closes similar or higher to what is happening right now, I think that's it for the dollar. I think we may actually be in the slow motion reversal of the US dollar to the upside. And if you've been listening to my videos, you know that recently I've turned from being bearish on the dollar for multiple months to neutral, and now things are actually showing signs of bullishness. So I'm going to talk about some of my favorite Forex trades right now for the dollar crosses, as well as what this could do to gold and indices. Let's jump in. First up, in terms of economic data from today, we had the ADP number that came in at 104,000 private payroll jobs compared to the red dot on our software here, a forecast of 77,000 jobs. So there was some nice job creation, and this is certainly a nice bounce back from the previously reported and trend of underperforming ADP numbers. So this is definitely welcomed in terms of the dollar strength that we're seeing here. But the big story today, take a look at GDP statistics. Advanced GDP numbers were expected to come in at 2.5%. So we were expecting a good bit of growth, but we actually saw really good growth expectations at 3% GDP. Guys, 3% GDP numbers at this interest rate level, with the expectation that the Fed is going to also cut interest rates, which will stimulate the economy further, the US economy remains really strong compared to what people thought it would be doing by now. And this has been a trend for multiple years now. People keep thinking the US economy is going to crater and it's going to enter a big recession. And then over and over and over, the US economy comes out swinging and comes in better than expected. That's what we saw here today. So all this talk about stronger than expected US jobs data and growth data is turning the ship for the dollar index. Just take a look at the US economic heat map, which is lighting up blue for the US dollar at this time. GDP statistics coming in better than expected, turning the US impact on this for both stocks and currency to bullish. ADP, same thing, flipped to bullish today from the previous number, which was really ugly. We got a really nice bounce back in ADP jobs numbers creation, and boom, another win for the dollar. So the dollar, in my view, looks strong. So of course, we'll see what Jerome Powell has to say later when he does his press conference stuff, but the large expectations are that the Fed is going to hold interest rates, and it's up in the air about whether they're going to cut in September. You can see currently the expectation for a rate cut today in the meeting is 97% chance that we're not going to cut rates, and instead we're going to hold them steady. But when we look out to September, there's still about a 60% chance that we are going to get our rate cut here that we've been looking for. So let's talk a little bit about some of the crosses that I'm watching closest going into this FOMC meeting and afterwards. So if I take a look, for example, at gold, gold has been really range bound. In some ways, there's some demand for it. And I just want to reiterate, I've been saying this a lot on my channel here recently, gold is just not it right now in terms of trading opportunities for me. It's very range bound. If you've been trading the range, then you've probably done really well. But trend traders, people looking for follow through, looking for breakouts, have probably been frustrated by gold unless you're trading like a really low time frame and just capturing like smaller moves. That might be fine. But for us swing traders and people who are looking at like the fundamentals, we're looking for those bigger breakouts and catalysts. You've really just had an indecisive market back and forth. So I do think that there may be some value in terms of buyers who maybe want to look at gold from a longer term perspective down in the 3260s range. Maybe that's an area to watch. Sellers clearly very strong with a quadruple top at the 3430 30 level, let's call it the previous high. So we'll see if gold can get something going here and break in one or the other direction. But with GDP numbers coming in strong, with jobs data coming in hot, it does make sense to me that the dollar stays strong and that gold path of least resistance is to sort of normalize, go downwards, and just remain overall sideways. I don't see it going down dramatically because there's still large amounts of uncertainty with, the world that we're living in right now. I see central banks still buying gold. So to me, it's like, okay, gold is still, there's a longer term buy, bias for me on gold, but in the short term still looks pretty ugly, pretty choppy, and slightly more bearish with such a strong reading on the dollar at this time. And another down day for the euro. Check this out. We do see a pretty sharp reversal taking place here. The slow motion reversal in the dollar, like I've been talking about, is more clear on things like euro dollar, where it's for the first time in quite some time breaking decisively through a key level of support. And take a look at market sentiment when it comes to retail positioning on currencies. We still have euro dollar hovering around 60% of retail investors being on the long side now. So retail traders have gone from shorting the euro to now starting to buy it, which to me as a contrarian signal potentially signals we could see further downside in things like euro dollar. Although the more obvious ones are actually the Australian dollar and the Kiwi dollar versus the US dollar. Let's have a look. Here's a look at the Australian dollar, which is actually breaking through the support level that we talked about yesterday and may be on its way back down to test these lower limits around 0.6380 for the Australian dollar. Would not be surprised as retail is starting to now buy the dip that we actually see this thing continue to drift lower, especially with the fundamental backdrop that we just got done discussing. The Kiwi dollar is also moving lower here. It's testing a level of support today. Let's see if this level can hold going into the FOMC event, but this is a pretty clear area of support as well. So very curious to see if we can continue to break levels of support. This could be, like I said, the early sign that we are in a true longer term reversal on some of these currency pairs, which have been trending up the last several months. And taking a look at the EdgeFinder's top setups page, we are still looking at a very bullish reading for NASDAQ, Russell, SPX, and oil, which I actually have a position on. Let me give you an update on that one. Here's a look at oil. Yesterday, I trailed my stop loss into profit after we got the huge move higher on some uncertainties about Russia and the US and Ukraine. We're seeing that kind of take surface again now that just when things kind of cooled off a little bit in the Middle East compared to where they were over here, we're now seeing some uncertainties rise about what's going on between Putin and Trump, Russia and US, and of course the Ukraine situation. But bit of a breakout yesterday. This thing looks really strong here, and in my view, I'm looking for an opportunity if we can get some follow through to the upside to look for an opportunity again to trail a stop further into profits. But at this point, I can't lose money on the trade. In fact, it's just a matter of how much money the market's going to give me. If we do get something like this, higher lows, higher highs, I could continue to trail and see how far this one wants to run. But I do think there's a possibility that we see oil make a push back towards these previous highs if you get any sort of geopolitical flare up in the Middle East and or the Ukraine situation. Taking a quick look at indices, NASDAQ, Russell, and SPX are getting good readings in sentiment data, technical data, and economic data according to the EdgeFinder. The utility of the EdgeFinder is it looks at a large collection of data sources like NFP or ADP like we saw today, CPI statistics, GDP statistics, and of course also the sentiment data, what institutions are buying or selling through the commitment of traders data or crowd sentiment, giving us contrarian signals. It loops all of these different pieces together and generates a bullish and bearish watch list for me every day to find trading opportunities built by sentiment, technicals, and economic data confirmations. If you don't have a copy of the EdgeFinder, listen up for a second because this is your last chance to get it for such a big discount. We're currently doing our biggest discount of the year. We're doing 40% off the EdgeFinder. And if you're a viewer of my channel and use the first link in the description down below, we're doing an extra 5% off if you send us a direct message today. So click the first link, let us know that you're interested in getting a copy of the EdgeFinder during this sale event. We'll share with you all the details about the offer. And as a special offer, if you need to, we can actually split up the cost of the tool into 3 monthly payments if that's easier and more accessible to you. We understand that this software is an investment for serious traders, people who are looking to incorporate fundamental analysis, sentiment analysis into their trading and to add further confirmations. We understand it's an investment. It is not a cheap product. It is a really powerful tool, but don't miss the opportunity to pick it up at the lowest price of the year. And if you need to, we can split it it up into 3 with our helpful staff here at A1 Trading. Just send us a direct message, let us know. So taking a look at the indices here, I am still in the camp of I think indices can move higher, but I would prefer in terms of trading opportunities to see a pullback in order to set up a better risk to reward trade. So on the NASDAQ, I'm looking for a move back to either the 22,600 level or a push lower to 22,100 or so. I think these areas would produce some much better risk to reward opportunities for me in my own trading. I'm also watching the Russell. If we were to get a sharper pullback to like 2200 or 2160, I might be interested in rejoining this trade, which was my best trade of the year so far. I ended up taking profits right here and bought the dip over here. So had a really nice trade on the Russell. I wouldn't mind getting back into it if we got a little bit of a pullback to make the risk to reward a little bit more attractive. The nice thing about looking for pullbacks on indices is that if they do pull back and you are correct, you can oftentimes capture some really good risk to reward trades. But of course, if you're incorrect, the market can continue to dump very quickly. The old expression when it comes to trading indices is that indices take the stairs up and the elevator down. They can crash very quickly, and so you do have to be aware that if you're on the wrong side of that, the way I like to play it is to get out quickly and to reevaluate and look for a better entry price. So for me on the indices, I'd much rather wait for a sell-off into an area of support with good fundamental backings. As long as that is still present on the EdgeFinder, I'll take that trade with an opportunity to make a good risk to reward entry. And did you know you can get a free copy of the EdgeFinder if you sign up and deposit according to the rules found on our website page, a1trading.com/8cap. with the brokerage, the well-regulated international brokerage 8cap. We've actually set up a deal for subscribers of my channel. If you create an account using the link in the description down below, a1trading.com/8cap, follow the steps that are present on that page and follow the instructions there, you can actually qualify for 8cap to purchase the EdgeFinder for you. So you get it for free and you get access to a really great brokerage. This unfortunately is not available to US traders, but for traders outside of the US who are interested in trading with 8cap, you can check them out and do your due diligence using the link down below in the description. Don't miss your chance to get a free copy of the EdgeFinder and a great brokerage. Reminder that all details can be found on that page. Today, I had a conversation with Johnny Hart and Kenny Fisher on the Market Insights podcast. If you're not a regular listener and you like podcasts about fundamental analysis, make sure to watch the full episode using the link in the description below. Check this clip out. Yeah, so with the GDP numbers coming in at 3% compared to the forecast at 2.5%, this was definitely a stronger than anticipated statistic out of the U.S. this morning. Like I said, big uptick, and as you mentioned, largely attributed to the tariff stuff, right? Of course, a lot of pull forward importing, and then it bounced back in that. But regardless, this just shows what has been a theme on this podcast for the last few years, the consistent resiliency of the U.S. economy, which just keeps shining through, it is pretty incredible, everything that we've thrown at it, and it still can put up numbers like 3% GDP statistics. I mean, that's very, very strong. And that's not the only figure that we had. We had the ADP numbers this morning, which came in much better than expected. Last month, that was a big disappointment. This month, we have 104,000 jobs in the private payroll sector compared to the forecasted 77,000. And then yesterday, we had JOLTS job openings. This was a little bit less shiny of an object. We had 7.44 million job openings compared to the forecast 7.51, but not a massive miss on that front either. So overall, we're seeing jobs data hold up pretty strong. GDP growth really strong compared to expectations, which again, as I like to point out in terms of expectations around this Trump tariff stuff, very hard to predict, and economists are having a very difficult time. Clearly, they've been wrong in many ways about how everything would fall in terms of the trade dynamics. But that is, of course, because there's so many twists and turns that have come with it, changing in negotiations and deals being made and deals that kind of fell together better than many people had anticipated. And so, yes, big bounce back in GDP statistics, even more so than what people had been thinking. And with this, the dollar index is on a win streak for the first time in a while. We're talking about 1, 2, 3, 4, 5 days in a row of dollar strength coming back into the picture. And it is possible that we are now putting in what might be a longer term bottom for the dollar dollar index. Of course, we'll have to see how inflation falls from here and if the economy can continue to put up strong jobs numbers. But I think the dollar is on the rise because people are seeing, this strong economic data. And the U.S. May not feel the pressure to cut rates as much. If you have strong jobs data, if you have strong GDP statistics, if the economy seems to be functioning pretty well without rate cuts, the Fed may not feel the need or the pinch to cut rates, right? So there is that possibility. And I saw it this morning in the Fed Watch tool. There was a slight lowering of the probabilities of a rate cut in September. I think we're down to 60% chance. However, I should add some context to that. We are filming this or recording this podcast episode prior to today's press conference, where we may get some further, discussion about interest rates from the Fed chair, Powell. So we'll have to hear about how everything has been going. A couple notes just to keep an eye on will be how he is approached in regards to the ongoing Trump and Powell kind of head-to-head debacle, as well as how the latest figures are potentially positioning the Fed for rate cuts, or if they're feeling no urgency to do so. Of course, there are Fed officials who are more on the favor of rate cuts, and there are also several who are not feeling the rush to cut interest rates. And one thing is very likely for sure, which is Trump is unlikely to get the amount of rate cuts that he has been clamoring for. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.